In today's video, I will walk you through how to read the Deribit order book. The Deribit order book is divided into two sections that show the real-time supply and demand for an asset. The top section is the asks, shown in red. This area lists limit orders from traders who want to sell the contract. The prices are arranged in ascending order, so the lowest price a seller is willing to accept appears at the bottom of the red section. This price is called the best ask. The bottom section is the bids, shown in green. This area lists limit orders from traders who want to buy the contract. The prices are arranged in descending order, so the highest price a buyer is willing to pay appears at the top of the green section. This price is called the best bid. Between the best bid and the best ask, you will see a gap. This is known as the bid-ask spread. For highly liquid pairs such as BTC Perpetual, this spread is usually very small and may only be pennies or fractions of a dollar. Next, look across any single row in the order book. You will normally see three main columns. The first column is the price, which shows the exact value where a trader wants to execute an order. The second column is the size or amount, which displays the total number of contracts available at that specific price level. For inverse futures and perpetual contracts, the size is displayed in US dollar values. For options and linear futures, the size represents the underlying base currency, such as whole or fractional BTC or ETH. The third column shows the total or cumulative depth. This adds together the total volume from the best available price down to the current row. It shows how large a market order can be before the price moves to that level. When a market buy order is submitted, it immediately takes liquidity from the red asks, beginning with the best ask. If the order size is larger than the contracts available at that first price level, it continues through the rows above it. This is known as slippage. If a buy limit order is placed below the current market price, it does not execute immediately. Instead, it appears in the green bid section as passive liquidity and waits until a seller reaches that price. You may also see a depth chart displayed alongside the order book. Large steps or steep walls on the chart represent buy walls or sell walls. These indicate price levels where large amounts of capital are waiting. When viewing an options order book on Deribit, you can often switch between displaying prices in the native crypto asset, such as BTC or ETH, or in implied volatility, also called IV. Finally, in the middle of the spread, Deribit displays the mark price. This calculated reference value is used for options and futures to evaluate your account's margin health and determine liquidations. It is also designed to protect against malicious flash crashes within the localized order book. Thank you for watching.